I have with me the Midcap Maverick, Hiren Ved. And typically when Midcap stock's in trouble, he's the first one who considers the selling in Midcap as an opportunity rather than as a trend reversal. He has always endorsed in the past that you get good bargains when there is volatility, when there is fear, and when the greed factor is missing. Guess what? The word greed is missing, fear is back, and financial media has officially started using words like plunge, rout, and uncertainty to really describe the rout in mid and small cap stocks. I'm right in my assessment, right? That's the way we would capture how mid cap stocks have moved this year. Plunge, rout, decline.
Absolutely.
But is this a good buying opportunity?
See, Nikunj, I think this is not the first time that we are seeing this happen. We've seen this happen in 2011, we've seen this happen in 2013. We saw a little bit of that happen in 2016 as well. So every 2-3 years you get this bout of selling, because obviously when the markets do well and the small and mid cap, we were already into our 4th or 5th year of rally after the Modi government came in. And without doubt there was a lot of froth in the system. There was too much of money chasing small and mid cap stocks. And then there were certain questionable managements, there were certain questionable business models which were getting 25, 30, 40 Ps, which was clearly unsustainable. So I think what we are seeing now is that typically we've seen that whenever the macro gets tough, there is a risk off environment that comes to the markets, and the small and mid cap stocks tend to correct very sharply. I tell all my clients that to some extent this is like a mini replay of the second half of 2013. You know, oil prices were high, rupee depreciated, there was some challenge on the current account and the fiscal deficit. Small and mid caps stocks got thrashed, and there was political uncertainty because elections were supposed to be 6-9 months down the line. We are pretty much in that kind of a situation. So while our macro is not as bad as what it was in 2013, but some of those elements are present this time as well. The only difference is that this time the small and mid cap Ps were far higher. And in January, as I've said before, that the CNX mid cap trailing P was at a 2200 basis point premium to Nifty, which was unsustainable.
So historically, by definition, mid caps are called mid caps because they lack large caps, both in terms of margins, growth, and also in terms of the management bandwidth. That's the reason why mid cap stocks trade at a discount to large cap stock. That's the long and short of how mid caps are valued from a market standpoint. Currently, mid-cap stocks are still trading at a premium to large-cap stocks.
Yes.
So, do you think the real bottom in mid and small-cap stocks will be made only when the price P multiples crack below large-cap stocks?
So every cycle is different. My sense is that there are two ways that the gaps can get bridged, and we are already seeing that, which is that the Nifty is up. If you look at the Nifty or the Sensex, you might just wonder why are people crying so much, because there's hardly any correction that you can see. But the broader markets have corrected very, very sharply. I think the gap is still wide, and one way the gap could be bridged is that the large caps go up or don't fall, and the mid and small caps continue to correct. My personal sense, and I could be wrong, is that this will settle down by October, November, right? I think nothing goes down in one line. So you will see lower tops and lower bottoms in small and mid cap stocks. And finally, by the time everybody throws in the towel, which is a few months down the line, is when they will really bottom out.
Are your clients feeling the heat?
Clients are worried, but not that much, because luckily for us this time, year to date, we are either just very marginally negative, and in one of our products we are actually positive for the year.
So what has saved you in this savage carnage? Which stock has been the anchor stock for you?
No, I think all our big bets did reasonably well. In fact, we're just lucky that many of our mid-cap stocks are actually at or near 52-week highs instead of lows, right? Not that we haven't, some of our stocks have also corrected, but by and large our bigger bets have done substantially better and have actually gone up in a falling market. So, this time we are sitting pretty this cycle.
You talked about a comparison between 2013 and 2018. The difference in that comparison is that whereas macro factors are same, mid caps are not exactly very cheap.
Yes.
A. B, that in hindsight 2013 turned out to be a great hunting ground for stock pickers like you.
Absolutely.
That 2018 may not be the case.
You are absolutely right. In fact, we had the highest exposure to small and mid caps in end of 2013 because you were getting decent 25-30% profit growth companies at single digit Ps. You are far from that, right? But I think this time the cycle is different. At least the way we are looking at the mid and small cap space is that there may be several companies which haven't gone anywhere in the last 3-4 years, which means that they were either flat or ignored. But they were going through an internal restructuring in their business, and therefore maybe for a temporary length of time their profits were not growing. We now believe that that is where the over ownership is not there, because if they have not done anything for the last 3-4 years, which means that people haven't bought those stocks, or people were tired and they sold out of those stocks. That, if you believe that there are certain businesses like that where there is an inflection point now, that over the next 2-3 years you will see profits growth, and most of the people are not over owned in those names, I think that is where the opportunity really is. And I think we are looking at those kind of opportunities where we think stocks haven't done well, but basically great balance sheets, no leverage, free cash flow, and the business is turning.
I'll like to draw your attention to what is happening to some of the retail based franchise, whether it is a retail bank like HDFC, a retail dominated NBFC like Bajaj Finance, or anything which has got to do with retail lending in this market is trading at a huge PE multiple or high price to book. On the flip side, you've got corporate franchises, banks and corporate banks, even corporate NBFCs, they are trading at a multi-year low.
Yes.
Is the divergence too large now?
Look, the divergence is large, but just merely the fact that there is a divergence doesn't necessarily mean that the valuation for the retail banks are unjustified and that there is a blanket opportunity on the corporate side as well. So you will have to take a very nuanced view of this. My sense is that what I'm seeing is that what we call traditionally as retail lenders like an HDFC bank or a Bajaj Finance are actually seeing opportunity on the corporate side.